All right, hello everybody, Anthony here. So today we just kind of continued to get the Ukraine news sort of all day, just pushing the markets lower a bit in the morning. They tried to find some footing, and oops, sorry there, folks. They tried to find some footing, and then it got drove lower as there was more news coming out from the State Department saying an invasion is potentially imminent. Literally the same thing they've been saying for 2 weeks. But what happened here, and let's look. So here's VIX. You'll notice VIX well under its Bollinger Band, and you'll notice over here the put call ratio lower than it was even just a few days ago. So to me, this is really kind of screaming that this wasn't the savvy investor, this wasn't the trader, this wasn't funds dumping because they would have been using puts to hedge themselves. This was retail capitulation selling. This was everybody dumping their 401k, dumping their IRA, that sort of thing, as the news just continued to kind of come in about Ukraine here. And it's, that there was no real one particular piece of serious news today. It was just, just it's kind of built up. And after this fall here early in the day, I think a lot of people kind of looked at their portfolios. They saw them go up a little bit, and then they just sold everything else off. And this movement here today, I believe, was a total of 127 points swing to swing, which is apparently the number 8 highest swing in the ES ever, according to a list that we found there. So that's this all just kind of screams, like I say, capitulation selling. Look at this. The ticks were under 1,000 for hours today. Obviously it jumps up and down, but for hours they're down under 1,000. This sort of sustained thing is just everybody dumping their accounts. But the VIX and the put call ratios, and I looked up the actual put call ratio on the SPY earlier. It wasn't that high. It's like 1.3, I think. It was 1.7 a few days ago. It just really says to me this was retail finally dumping, and as we all know, when retail dumps, that's when big money finally starts to look at things and it's like, oh, okay, maybe we can buy. This look right here, this is a higher low double bottom. This is the SPY daily. The ES looks pretty much the same. It's a higher low double bottom from this low back here in January 24. And this looks really, really similar to the pullback at the end of 2020. If you look at October, November 2020, it looks really similar. And today I think we went down to a total of, it's not here anymore. It was 11.8 or 11.9% pullback there today. So it's looking pretty oversold. It's important to note the Nasdaq today actually fell below 20% pullback. That is an official bear market on the Nasdaq. The last time that happened was rate raises December 2018, and we now have seen this pullback again. This level is this level of bear market here in the Nasdaq very rare. Does not happen often. So everything right now kind of looking like I say, it was capitulation, retail dumping out, and we all know that when retail sells, they usually sell at the bottom, and when retail buys, they're usually buying at the top. So that's kind of a little bit of good news there. We have to think, if any sort of like actual invasion now happens in Ukraine, and like we were talking about this, if there is now an actual invasion in Ukraine, is anybody going to sell more? And I've already positioned myself. I know most others have. And now, after today, most of retail is sold off, expecting this invasion into Ukraine. So when that actually happens, because, quote, it's potentially imminent, which, again, they've said for 2 weeks now, when it actually finally happens, will that be the trigger for the market to breathe a sigh of relief finally, kind of like we saw the other day when Putin just went into the separatist areas. Will that be that huge, 100+ point move up day that's just going to melt up and, face rip people? That's why down here, that's why the put call ratio is so low. That's why the VIX is low, because everybody that's savvy is looking at this and says, yeah, this is really extended. I went ahead and entered some SPY leaps today. We had a couple of trades. One I had to roll till next Monday. The other we pretty much bottom and top ticked this move back up in the market right here. Didn't intend to bottom and top tick it, but it was pretty close. It was really close. So that was nice. But yeah, we'll just have to wait and see what happens here towards the end of the week. Like I said, I did open some SPY leaps, so I think those will eventually pay, and we can run income diagonals against those. So that's really all I've got. Like I say, I mean, I don't see the markets falling too much more at this point, either technically or fundamentally. But hey, I've been wrong plenty when it comes to the market. I'm wrong all the time when it comes to the market, because the market is a very unpredictable thing. So who knows? It could drop to 4,000, or it could bump 5% upwards tomorrow. Who knows? And history kind of bears that out again and again. So we're going to keep doing what we do and just sit here and watch our intraday charts and try to get some trades against it, because this is massively news driven at this point. Without more news, does it bleed lower? Does it just kind of go sideways? Or when you finally get that one good piece of news, does it just rip up in a melt up? It's all going to depend on the news. So that's all I've got. I hope you guys have a nice evening, and I'll talk with you tomorrow.